There are so many great resources out there for first-time buyers, and today I want to take it one step further and share some unique pro tips that you're not going to see on most lists. They're equally important items that aren't discussed enough, and I want to make you the most educated buyer possible. Let's get started. Hey everyone, welcome back to my channel. I'm Erica Monroe. I'm a realtor in the Bay Area, and I specialize in Solano County. Did you know that you can actually tap into the 2023 Conforming Loan Limit amount now and not have to wait until the new year? As a friendly reminder, every county has a set loan limit. It's the maximum you're allowed to borrow from a bank or a lender without going into a jumbo loan. So a conforming loan is just a standard loan. In 2022, the maximum you could borrow for a standard loan was $647,200. In 2023, the amount's going up by $79,000. So in Solano County, you will be able to borrow, if you qualify, up to $726,200. That's a significant increase, and it's increased because our home values have continued to rise in 2022. So if you were previously capped, you actually qualified to borrow more than $647,000, but that wasn't an option at the time. You can now tap into that extra $79,000. It may help offset how much down payment you have to have. Mind, every county is different, so if you're in Contra Costa, Alameda, Napa counties, your loan limits will be quite a bit higher. Did you know that most builder warranties will transfer to the new owner? So if you are buying a newer home, not brand new directly from the builder, but a newer home, if the house is less than 10 years old, you can likely transfer that builder warranty at the close of sale. Most builder warranties that I've seen span for a 10-year time frame. So if you are purchasing a home that's only 2 or 3 years old, you should be able to transfer that warranty and have that peace of mind of that extra 7 years or so of coverage. Many sellers may not even be aware that the builder warranty is transferable, so make sure your agent asks on your behalf. Get that communication started now, because it can take some time for the builder to respond and send over the necessary paperwork. I've mentioned this tip before, but it's so important, I want to reiterate. Don't pay off any major debt or credit cards until you've talked to a lender. All of my trusted lenders tell my clients that they want to review their profile and overall debt to income ratio before they ask you to pay off any debt. It could be that you need that cash readily available, and that will be the difference between you qualifying to purchase the house and not. So even though it seems like a good idea to go ahead and pay off your debt to lower your debt to income ratio, you might need that cash free, ready to go to help you purchase for that down payment or closing costs. So talk to a lender before you go to make any major reductions in your debt. This next tip is for buyers planning to purchase a property with the intention of turning it into a short-term rental, such as an Airbnb or a VRBO. It's important that you connect with the city that you're purchasing in to make sure that there aren't any restrictions or regulations against having a short-term rental. I called the city of Vallejo, Fairfield, and Vacaville to find out what the requirements are, and I was told that you actually cannot have a short-term rental. This was really surprising because I do see listings in all 3 cities, but as an investor, it's important to keep in mind it only takes one neighbor to report you. So buyer beware, important to consider. Make sure you connect with the city that you're purchasing in to find out if you are permitted to have a short-term rental. Solar can be the difference between you qualifying to purchase the house and not. If solar is leased or financed, meaning there is a monthly payment that the buyer will have to assume, your lender is going to have to consider that monthly payment as part of your overall pre-approval. So if the house that you love has solar, it's really important to get that information up front. Make sure you find out how much that monthly payment is, communicate that to your lender, have them run the numbers, and make sure you would still qualify. I'd hate to see you go through the entire process of getting your offer accepted, spending money on the appraisal and inspections, only to find out that you don't qualify because you've exceeded what the bank believes you can support monthly as far as a payment. gift funds are so common and, in my opinion, are not discussed thoroughly enough. So gift funds are funds that you receive from somebody who's not purchasing the house, so somebody who's outside of the contract, and it's typically a family member. They're gifting you money to help towards that down payment or closing costs in order for you to qualify and have enough funds to purchase a house. A lender unfortunately won't acknowledge a friend lending you money because they need to believe that you don't actually have to pay that money back. There could be some crazy agreement in place, and the lender's worried that you're going to default on your mortgage amount if you're also having to pay this money back to your friend. So keep in mind, gift funds almost exclusively have to come from a family member. There may be some workarounds, such as seasoning those funds. So let's say your friend gives you $10,000 and you keep it in your account for over 2 months, then those are considered seasoned funds. They would be counted as your own money because a lender only pulls your bank statements for the previous 2 months. That may be the only workaround in allowing your friend to help you purchase a house. Really important, if you have additional questions, absolutely reach out to your lender because gift funds can be kind of complex. My last tip, which I covered in depth last week, is the ability to temporarily buy down your interest rate. High interest rates have really pressed pause on the market, so knowing this information, you may be able to ask the seller to pay for your buy down. They may offer credit to help you buy down the rate for the next couple years, again, until interest rates naturally fall. You can refinance then, but for now you don't have to deal with major competition. It's rare to see multiple offers in today's market. So know this information, leverage it. Check out the video above for more in-depth information on what it means to temporarily buy down the rate. Or if you have any questions about what I've covered today, reach out to me at ericamonroe.com.